Thank you. Sit. Hey. Hello. Good afternoon. So it's good to see you all. Very, very young people gathered. I'm sure you are enjoying school. I hope you are enjoying school. Okay, so I have a short prepared speech here. So I'm just going to read through it. But I bring you greetings from the central bank. These days we are quite busy. We are busy because it has to do with the US dollar, isn't it? It's a daily fight. The MPC, you heard about the MPC, the Monetary Policy Committee. They had to meet this morning in an emergency meeting, not to set or do anything about the policy rate, but just to review the numbers and also take stock of some of the developments in the markets to get a sense of what is going on and what our options are ahead of their meeting. The main meeting is in 10 days. And so from morning, we were at that. We just closed from that meeting. And I decided to rush here, share a few thoughts with you. After that, I'll go back to work on the statement that will be issued later today. It is not a policy statement. It is not what we normally do. Many people were thinking we're going to do something about the monetary policy rate. That was not the objective. It was just to look at the numbers ahead of the main meeting that will start in 10 days' time. So I'm glad to be here. Dean of the UPSA Law School, Professor Ines Kofi Abochi. I really enjoy listening to you all the time when you're on stage. Distinguished faculty and staff of this esteemed institution. We have a number of panelists here. After I'm gone, they'll take my place and discuss the issues in depth. We have some scholars here, captains of the financial industry. I can see Mr. John Ewa and others, a few managing directors as well, representatives from the media, ladies and gentlemen. So let me begin by expressing my heartfelt gratitude to the leadership of UPSA Law School for this invitation and for convening such an important and timely dialogue. The quarterly banking roundtable has rightfully earned its place as a premier platform for policy, academic, and professional exchange. Exchange where thought meets strategy and scholarship meets national imperative. And I'm deeply honored to be part of today's conversation. So, colleagues, we gather at a critical juncture in Ghana's economic trajectory after navigating a turbulent period marked by global shocks, domestic restructuring, and currency depreciation. And Ghana stands today on a firmer footing. Confidence is returning, economic momentum is strengthening, and most symbolically, the Ghanaian Cedi has become a testament to resilience, to recovery, and to reform. Colleagues, this turnaround is not cosmetic, as we always say. It is structural. It is backed by stronger fundamentals, prudent macroeconomic management, a disciplined monetary policy stance, and a growing sense of national purpose. Inflation, as you are aware, has fallen to its lowest level since 2021, and the Cedi has appreciated over 42% year to date, while gross international reserves have risen to over 11 billion, which is equivalent to 4.8 months of imports cover while provisional trade surplus records about 5.6 billion. But let us be clear, currency stability is not merely a technical victory. It's not at all. It is a psychological one. It shapes how people save, how people invest, how people transact, and ultimately, how they trust the state. Confidence in the cedi, therefore, is a mirror of confidence in our institutions. It is a barometer of sovereignty, a symbol of our unity, and a driver of our collective economic destiny. And so today's theme, Ghana's legal tender, monetary policy, and the rising cedi, is not only relevant, it is very essential. It calls us to examine not just how the cedi has recovered, but how we as a nation can entrench that recovery through legal, policy, and behavioral alignment. And I'll come to each of these later in my delivery. Now, at the heart of any sovereign monetary system lies a legal foundation, a foundation that defines and protects its currency. So in Ghana, this foundation is established by the Bank of Ghana Act 2002, which is quite an old act, Act 612. This act confers exclusive authority on the Bank of Ghana on the issue of issuing currency, and the act designates the Ghanaian cedi as legal tender for all transactions conducted within the Republic. And let me say that the dollar is not legal tender. It cannot go everywhere the cedi goes. The dollar is not legal tender in Ghana. What it means is if you pay me in dollars for service or something I sell to you, I have every right to say no, I will not accept it, right? So why do we allow the dollar to go everywhere the cedi goes? Consciously, we must be able to protect the cedi. We must be able to ensure that it's the only form of transacting in this country. Now, legal tender in its simplest form refers to money that must be accepted if offered in payment of a debt. But its implications are far deeper. It underpins the legitimacy of pricing, the enforceability of contracts, the structure of our payment systems, and the integrity of our financial markets. What this means is that any attempt to displace the cedi in ordinary commercial transactions, whether through mandatory dollar invoicing, preferential pricing in foreign currency, or informal currency substitution, is not only economically distorting, but also legally impermissible. It challenges the very fabric of monetary sovereignty. So the legal tender status of the cedi is therefore not a ceremonial provision. It is the cornerstone of macroeconomic governance. It ensures that monetary policy decisions, interest rates, liquidity management, inflation control, all these can transmit effectively through the economy. And without a dominant legal tender, no central bank, no matter how technically capable, can execute its mandate successfully. But the cedi is more than just a unit of account or a store of value. It is an emblem of Ghana's journey as a modern state. Now, cast your minds back to 1965, when the cedi replaced the British West African pound. For those of you, maybe most of you were not born at that time. The West African pound used to exist prior to the introduction of the Cedi. That event marked a profound act of economic self-determination. And this was done by our first president, Dr. Kwame Nkrumah. It was not merely a currency change. It was a declaration that Ghana would no longer outsource its monetary destiny. The Cedi became a symbol of national identity, of institutional emergence, and of the aspirations of an independent people. And so this month, July of 2025, marks 60 years exactly when the first president of Ghana introduced the Cedi. And we are going to be discussing all these in the next 6 months. We are going to be charting forward another journey for the Cedi. The Cedi can be as good as the rand. Why is it not as good as the rand? So therefore, collectively, we will get this fixed. The Cedi can be as good as any currency. You don't need to hold the dollar. It all depends on what we collectively do with the currency. Now, on the 8th of August, the celebration will be launched by His Excellency the President at the International Conference Center. And let me invite all of you, as many as you can, please join us. We want to make a bold statement that day, that as a people, if 60 years ago, the first president of Ghana decided to take our history, our affairs, into our own hands, 60 years down the road, we should be doing the same. And we must all collectively, as one, make a bold statement that day. It moved from fixed exchange regimes and liberalization to redenomination and the modern digital economy. Through all these, it has remained a thread that binds our economic story together. And yet, the greatest threat to its legitimacy today is not inflation or external shocks. It is the erosion of public trust through informal substitution, and dollar preference. In too many instances, whether in real estate, whether in paying school fees, or whether in high-value retail, the Cedi is bypassed. Not because it is legally unfit, but because we have allowed perception to trump policy and convenience to trump sovereignty. How many of us are not guilty about this? I was in a program yesterday or so, and I was urging them not to allow the allergies or the examiners to project to project exchange rate depreciation. Now, the exchange rate is what we call an endogenous variable. It is driven by a number of macroeconomic factors. And so, therefore, we churn out data repeatedly. If you go to our website, there's a lot of data there. The idea is so you can use that data, right, to form your own projections, your perceptions about where the Cedi will be vis-a-vis the dollar. But it is as if our people don't refer to those. We prefer to listen to someone in the corner somewhere to tell you where the Cedi will be. And so recently, you saw when the Cedi began to appreciate, it just kept going. It just kept going. And we kept saying, no, just allow it to move. What we have is a managed float system. And that system is appropriate for our kind of, economy. Now, we did not expect it to just keep going and going and going. We knew that at some point it recovers. Now, as it moves, as it is, continues to move flexibly, it's actually protecting the country. It's responding to a number of, variables in the country. And by being flexible in itself, it helps to protect the country against shocks. So allow it to move. When it begins to come up, allow it to come up, right? It will go down again. Now, in so doing, there's one thing we look at. What we look at is called the real effective exchange rate. The real effective exchange rate is a combination of both inflation and the nominal exchange rate. So while the nominal exchange rate is moving, we are looking at what's happening to inflation. And therefore, there's something we call exchange rate misalignment. So long as in real terms it is not misaligned, you'll notice that we allow the nominal exchange rate to continue to move. But as soon as we notice a persistent realignment, that means something needs to be done, and that's where we intervene. So these things don't just happen. And if there's anything I want you to remember this evening, all I'm saying is let these things be driven by evidence, by the data, not by what my good friend, the allergy in the corner, tells you. These are macroeconomic factors. And as students, I want you to develop that. Everything, every projection, every forecast, anything you want to do, let it be what? Backed by data. Look for the data, form your own expectations. This thing about the heading effect, everybody moves in one direction. Now that the Cedi somehow has stabilized, we're seeing some bit of tension. Everybody thinks, oh, it's about to reverse its gains. It's not about to reverse its gains, right? If we allow the Cedi to perform the function it's supposed to perform within a flexible exchange rate regime, you see these movements, right? It doesn't mean the world is going to come to an end because it will move again, right? So this attitude needs to change. In countries like Kenya and South Africa, it will be unthinkable for a citizen to reject the local currency in favor of the US dollar. And those of you who have traveled to South Africa will bear witness, right? When you go there and you give someone the US dollar, they tell you to go to give them the rand, right? But in Ghana, if I give you the US dollar, what will you do? You keep it. But I expect you to tell me, no, please, give me the Cedi. Can we get to that? Can we ever get to that? Within my lifetime, I pray I see it within my lifetime. Right. Right. So in Ghana, if we are to safeguard the Cedi's role in our economy, we must begin by reclaiming its prestige in our everyday lives. Let us price in Cedis and let us transact in Cedis. Let us teach our children that the Cedi is worthy of their trust, their savings, and their ambition. Because in the end, the strength of a currency is not determined only by central banks or financial markets. It is determined by the people who use it, the people who protect it, and the people who believe in it. And recently, I heard about a story somebody was telling me somewhere within Accra where you find these currency counterfeiters. You know about counterfeiters? Those who try to produce the notes on their own, illegally. And he was telling me people in the area know about these, and yet they are not concerned. And so when we allow such things to thrive in society, why then are we surprised that the currency doesn't have worth? If you find anyone engaging in currency counterfeiting, whether the Cedi, the dollar, or whichever one, please, my phone number is all over the place. Everyone knows my phone number. Send me a WhatsApp. Send me a WhatsApp. You know, and the heartbreaking part is that I'm told a lot of foreigners are involved in that, right? They are counterfeiting Kwame Nkrumah's Cedi. The Cedi he introduced, they are counterfeiting it. They are destroying it. And Ghanaians know these people. They just keep quiet. They look on. Something needs to change about us. We all have a role to play when it comes to preserving the worth of the city. We will do our part. At the Bank of Ghana, we will. That's what we are paid to do on a daily basis. But you must do your part also. If you find somebody doing the wrong thing, just send us the details and we will move in. Now, currency stability does not occur by chance. It is engineered through prudent monetary policy, through disciplined coordination, and the ability to inspire confidence in the future path of the economy. And in recent months, the Ghanaian city has experienced one of its most remarkable turnarounds in recent memory. Behind this resurgence lies a carefully calibrated policy mix, built on sound principles and timely interventions. So at the core of our approach is an inflation targeting framework I'm sure many of you know about. This framework guides our monetary policy stance and anchors our expectations. It is this framework that defines the threshold for tightening or loosening liquidity, ensuring that decisions are forward-looking and data-driven. And again, the name inflation targeting, I always say that it is like a misnomer. The name is misleading. Many people hear about it and they conclude that all that we are interested in is inflation. It's not. We are interested in the real sector developments as well. In fact, if you come to our monetary policy sessions, you see us go through so many kinds of real sector data. And what we have done since we came into office was to open things up. And so if you want to witness what we do before the decision is made, you are welcome. Just send us a letter. You want to observe. You are allowed to come, you sit in, you participate in the arguments. You actually ask questions, and the technical staff are there to answer. So at the end of the day, you can actually have a feel of whether the policy rate should go in a particular way. And we've also changed the voting pattern. So these days, it is the majority decision that counts. And even after the voting, we publish the arguments that each of the members made for which reason they voted in a particular way. And so what we brought on board 5 months ago is greater transparency. And we want the people of Ghana to be involved in monetary policy making. It shouldn't be something that is shrouded within the walls of Bank of Ghana alone, but it should be something that you're able to replicate, right? It doesn't matter who sits in the chair. If you sat in my chair, you do pretty much what I do. Because that is credibility. That's how we buy credibility among the people, among economic agents. And so these days, we go all over the place, even after MPC, explaining what it is that we do, etc. And so as academia, you can organize yourselves. You're more than welcome. Come and see in practice, right? Are there any economics students here? Do I have any students here learning economics? Can I see you by hands? Who are the economists here? You are all what? Law students. Forgive me. I thought some economic students were here. But never mind. Even if you are reading law, you may want to understand what we do. Is that okay? So that's good. You can organize yourselves. We can arrange for you to come and observe what we do. Right? Okay. So key among our instruments is the monetary policy rate, which serves as the primary tool for signaling the direction of inflation and managing liquidity conditions in the economy. By adjusting the policy rate, The bank influences borrowing costs, it influences credit creation, and it influences consumer behavior. We also complement these with what we call open market operations, including the sale and purchase of Bank of Ghana bills to fine-tune our short-term liquidity management framework. These operations have been critical in sterilizing excess liquidity and reinforcing the policy rate corridor. To stabilize the exchange rate and reduce speculation, we deploy a transparent and rules-based forex auction system. These auctions allow the bank to meet legitimate demand in an orderly and non-disruptive manner while minimizing arbitrage and hoarding. Finally, our reserve management strategy has shifted towards consolidation, building adequate buffers to withstand external shocks and reinforce the credibility of our commitment to exchange rate stability. So let me give you some data on the outcome of these actions in recent times. Inflation, which reached a peak of 54.1% in late 2022, has fallen consistently for 6 consecutive months. It now stands at 13.7% as of June 2025. This is the lowest level since December 2021, and we expect that even before the end of the year, inflation will decline to settle within target band, which is 8 plus and minus 2%. The Cedi, as I mentioned, which was once under severe depreciation pressure, has appreciated by 42.6% year to date, compared to a 19.2% depreciation last year. This appreciation is not merely nominal, it reflects real strength and underpinned by improved confidence, increased supply of forex, and reduced speculation. Then we have our gross international reserves. This has risen from 8.9 billion at the beginning of the year to over 11 billion as of June 2025. Now we benchmark to the level of imports, and when you do so, it is equivalent to 4.8 months of imports cover. This level has not been seen since the COVID period. Now, this progress has been reinforced by macro fiscal coordination, particularly under the IMF-supported ECF program. The Ministry of Finance's commitment to fiscal consolidation has reduced the fiscal monetary policy conflict, allowing our policy tools to work more effectively. The staff-level agreement with the IMF, combined with improved credit ratings, has further boosted investor confidence and supported portfolio inflows. Now, one of the most underappreciated elements of monetary stability is the power of transparency and consistent communication. In a context of uncertainty, speculation thrives on silence. And this is why the Bank of Ghana has strengthened its forward guidance function. Through timely monetary policy committee press releases, inflation outlook reports, and stakeholder engagements, we provide clarity on our policy intentions. This not only aligns market expectations, but also reduces the risk of destabilizing reactions. Our experience confirms a basic truth, which is that policy effectiveness improves when the market believes the central bank will do what it says and says what it will do. So on the Cedi's rise, while monetary policy has provided the stabilizing anchor, it is the structural shifts beneath the surface that have created durable momentum for the Cedi's performance. On external sector resilience, our external position has improved markedly in the first half of 2025. The trade surplus surged to over 5.6 billion for the first half of the year, up from just 759 million a year earlier. Remittance inflows have continued to grow steadily in spite of some hiccups in the last 3 months or so. And this has been supported by the adoption of mobile-enabled remittance platforms and sustained diaspora engagements. The provisional current account surplus also improved to 3.4 billion in 2025, as at the end of the half year, from a surplus of 283 million within the same period last year. Inflows from the World Bank, the IMF, and other multinationals have also helped improve Ghana's external financing position and reduced rollover risks. On the domestic front, the success story is one of painful but necessary reform. The Bank of Ghana's post-debt restructuring strategy focused on 3 critical priorities. First is digital finance oversight. Under this, we have streamlined our licensing frameworks for payment service providers, for enhanced cyber resilience protocols, and we have initiated pilots for the ECD. Ghana Central Bank's digital currency, which we call the ECD, that project was launched a couple of years ago. We are still piloting it, and hopefully within a year or two, some progress will be made in that regard. This is positioning the Cedi for relevance in a digital-first financial ecosystem. The second plank is banking sector stabilization. And under this, the sector remains stable, with capital adequacy improving to 15.8% and liquidity buffers being rebuilt. While non-performing loans remain elevated, risk-based supervision is being enhanced to contain vulnerabilities. The third plank is forex market integrity. And under that also, the bank has stepped up surveillance to ensure that retail and institutional FX pricing remains aligned with official rates while curbing illicit parallel market activities. These efforts are occurring in the context of fiscal restraint, which has helped reduce inflation expectations and facilitated the real appreciation of the cedi. Now, despite these macro-level gains, the cedi's long-term strength depends not only on policy, it hinges on how widely and willingly it is used within our own borders. And as I mentioned, a disturbing trend persists, where a growing number of local businesses and service providers, particularly in real estate and other sectors, are demanding payments in US dollars or quoting prices in foreign currency. This is a breach of the law and a breach of trust in our national currency. We need to act together to decisively reverse this culture. I've also already mentioned the example of Kenya and South Africa to be our guide. Now, to strengthen enforcement, the bank continues to issue directives and circulars to regulated institutions, reiterating the primacy of the cedi in domestic commerce. We are collaborating with law enforcement, the Ghana Revenue Authority, and sector regulators to monitor and prosecute breaches. And thirdly, the regulatory sandbox initiatives and fintech licensing reforms will require that all local financial services remain cedi denominated by default. Digital innovations such as the ECD are also pivotal. Once fully scaled, the ECD will ensure that even in cashless transactions, the Ghanaian cedi retains its primacy, not only within formal banking systems, but across rural economies, mobile platforms, and regional digital trade corridors. In parallel, the Bank of Ghana is finalizing a regulatory framework for virtual asset service providers, or what we call VASPs. And this is to bring oversight and transparency to digital asset activities. In other words, what many of you know as cryptos and others. This dual approach, introducing a sovereign digital currency while regulating crypto-based platforms, will secure the Cedi's relevance in the evolving financial landscape and ensure that innovation supports rather than undermines monetary sovereignty. And so hopefully from the end of September, we are going to be able to regulate the exchanges that provide what you know as cryptocurrency. A friend of mine says cryptocurrency is like the air we breathe, right? It's like the air we breathe. It's everywhere. You know, you can decide to look the other way. You can decide to pretend it doesn't exist. But the reality is it is ongoing. Many people are using it. I'm not an advocate, but I'm someone who wants to ensure that for those who use those platforms, they use them responsibly, that they use them safely. And so we are introducing the legal framework. The draft law is now ready. We are going around sensitizing different groups. Hopefully by the end of September, the draft law will get to cabinet and eventually get passed. And when passed, we will have our powers to be able to enforce, to be able to regulate the exchanges in particular. So the rising Ghanaian cedi is not merely a financial milestone, it is a strategic opportunity, an opportunity to reinforce our monetary independence, to rebuild trust in our institutions, and to craft a currency system that is not only stable but future-proof. Now, our long-term vision as a bank. At the Bank of Ghana, we remain firmly committed to a long-term agenda, an agenda that is anchored in price stability, inclusive growth, and financial innovation. We understand that low and predictable inflation is not just a macro target, it is the lifeblood of economic planning, investment confidence, and household welfare. We are equally focused on deepening access to finance, particularly through digital channels, so that the benefits of monetary stability are felt at every level of the economy, from micro enterprises in Tamale to fintech startups in Accra. But perhaps more than ever, the times call for a renewed commitment to macroeconomic sovereignty. The global landscape is increasingly uncertain, shaped by rising geopolitical tensions, tightening financial conditions, technological disruption, and climate-related shocks. Ghana must therefore build a monetary regime that is resilient, self-reliant, and able to respond swiftly to both external and internal pressures. And that resilience begins with a strong, trusted, and dominant national currency. On policy and legal collaboration, achieving this vision requires more than technical interventions. It demands strategic collaboration, especially between central banking authorities, financial regulators, and academic institutions such as yours. And this is why I believe institutions like Absa Law School have a unique and indispensable role to play. You are the thinkers, the critics, and the legal architects of our financial future. We need your input not only in understanding the evolution of monetary law, but also in reimagining its future in areas such as digital currencies, such as cross-border payments, such as sustainable finance, and such as legal frameworks for virtual asset regulation. Let us work together, colleagues, to develop a forward-looking ecosystem, an ecosystem where legal literacy meets monetary policy, and where the next generation of lawyers, economists, and policymakers are equipped to defend Ghana's financial sovereignty in an increasingly digital and integrated world. But beyond the legal and academic realms, I must also issue a call to action to all stakeholders, banks, businesses, fintechs, and professional associations that upholding the legal tender status of the Ghanaian cedi is not a sole responsibility of the central bank. It is a collective obligation. We need businesses to price in cedis, to respect the currency in practice, and to help shift national sentiment from dependency to dignity. And we need financial institutions to continue investing in cedi-denominated digital platforms, lowering transaction costs, and making the local currency the default of choice, not merely by law, but by convenience and by trust. And most importantly, we need to empower the youth, who are not only the most digital savvy, but also the most globally connected. To them, I say, trust in your currency is trust in your future. The cedi is not a relic of the past. It is a tool for building a new economy. The Ghanaian cedi's resurgence is not an accident, as I said. It is the product of bold policy choices, collective discipline, and prudent stewardship. It is proof that with the right reforms, the right institutions, and the right mindset, we can reverse decline, we can restore stability, and we can reclaim confidence. This is not the end of the journey. It is only the beginning of a new chapter. A chapter in which the cedi is not merely stabilized, but respected, widely used, and digitally future-ready. So let me thank the Absa Law School once again for its leadership in convening this important dialogue. Your commitment to bridging academia and policy is exactly the kind of thought leadership Ghana needs at this crucial moment in our economic narrative. Let me also thank the panelists, yourselves, students, and professionals gathered here. You represent the very constituency that must carry this message forward into lecture halls, in courtrooms, in boardrooms, and in markets. And I am confident in the path we are on, not because the journey is easy, but because the destination is clear. And that is a Ghana that manages its money well, a Ghana that governs its currency with integrity, and a Ghana that builds a future that is anchored in financial sovereignty and in inclusive prosperity. Let us continue the dialogue with open minds and shared purpose. Indeed, the cedi is rising. Let us rise with it. I thank you for your attention.
Please, let's put our hands together once again. You can resume your seats. That's very, very inspiring. You have been told